Good morning, traders. It's Wednesday, March the 8th. Taking a look at the charts, we got the SP 500. You can see here we had that big pop there on news with Trump speaking, and we faded back down in a nice controlled manner, back down to the original level, giving back all that news-related pop. And the market more or less has had a nice little breather. It hasn't really been strong volume selling. It's just been average volume. We've got momentum cycle already starting to move up here, which is a good sign. We got our short-term yellow cycle here down in the lower reversal zone. More or less our long-term blue trend line here, our blue cycle here is in a strong uptrend, and our intermediate cycle is also in a very strong uptrend. So we are getting down to this point here where the market seems to be kind of more or less in kind of the corrective phase and very close likely to a potential pop. Now, if we take a look at the charts here, here is the 30-minute chart. And the green bars mean that this is the SP 500, this is 30 minutes. The green bars mean that we're in a strong uptrend. We've got our moving average stepping up beside it. And more or less what we're looking at here are a couple different things. We've got the grand scheme of things, we've got the momentum cycle here on this time frame in the lower reversal zone, our short-term cycle down here also. Usually that signals that the market has had enough of a correction that it should be reloaded with energy for the next run higher. And you can see here we're getting close to a moving average, so we're starting to get down to this level where we should naturally try to start to find a bit of a support zone. And a couple days ago, we saw some panic in the market. We had a big gap down. Everybody was dumping shares. When this jumps over this 3 level, that typically means that there's panic in the market. And everyone's selling, and usually when everyone's selling, usually that's when the market starts to put in a bottom. We talked about that yesterday. Yesterday afternoon, we started to see fear creep into the market again, closing at the 3 mark, and we had some more selling into the close. Ideally, I'd like to see a gap down or a quick flush with panic selling spiking back up, kind of dipping us into a short-term oversold territory. And I think it could be a good opportunity if we could get that for a pop to the upside and to see the market continue to move higher. And of course, on the daily chart, we could see it come all the way back up to test these recent highs over here and potentially go beyond that. So that's kind of where we are in the grand scheme of things. The market's taking a breather. It has had this gap fill where it kind of more or less filled yesterday and the previous session with some panic selling. And the only thing is that's kind of catching, that's a little different, is the VIX. Let's take a quick look at the VIX. The VIX, I'll just focus here on just the price chart. If we look at the VIX really, we didn't see any real panic selling in the last 2 days. Even though we saw shares being dumped and we saw people kind of panicking out of their positions in the market on the gap down, we didn't see fear jump up, which is why I want to see, if we just move back to see this chart over here, zoom into the 30-minute, this is why I'd like to see a gap down. I'd love to see a gap down at the 20-day moving average. More or less at this point, if the market drops below this little green line here, that would technically put us into an oversold condition. So ideally, I'd like to see us drop below this green little hashtag here, somewhere in this area, and we see this indicator spike up showing there's panic shares and being dumped, and we see the VIX here pop in price, and we see fear in the market. We want to see fear across the board with panic selling, and we want to see fear in the VIX, that everyone's scared and buying leverage to the downside. And usually once the market flushes itself out and we have all levels of fear kind of spiking, that's usually when you see a pop in the market, and then you start to see it take off and go higher again. So that is what we are looking for on the chart. Now, if you see the cursor moving on this green chart over here where these B's are, and then you look over to the VIX chart on the right, you can see the cursor moving in the same time. Now you can see over here we had the market dip into an oversold, a short-term oversold territory based on price action, not cycles here, but just price action. We did also see this move all the way up to the 3 marks, telling us that people were more or less dumping shares, because anything 3 or higher is short-term panic selling, usually a pivot low. And of course, the other thing we saw in line with that is the VIX. If you look at the VIX cursor moving back and forth, we had panic selling on these 2 days. and we saw panic in the VIX where the VIX spiked up, and that's what we want to see over here. We want to see that VIX really pop and flush everyone out, and then boom, we see a knee-jerk reaction to the upside and new highs, and see if we can tag this 2400 mark again, which is a whole number, which is one of the reasons why price actually stalled out there. Is we had a huge move up on news, which is typically not a good thing. Usually news-based spikes are given back, but we gapped right up, ran into a whole number. 2400 is a decade type of number, or a significant number. When it's a whole number like that, there will be sellers all back in here saying, if it ever hits 2400, I'm going to sell my position and lock in profits. There'll be other people saying, if it hits 2400, I'm going to short the heck out of the market. And that's why it creates this big resistance zone when you get to these decade numbers. 2400 is a significant level. So that's what we're seeing here. We're just letting the market work itself out and hoping we see a little bit more of a flush down here before the market picks up speed and potentially takes off. So that gives you a feel of kind of where we are in the grand scheme of things for the SP 500 and really all broad markets like the Russell 2000, Dow, and NASDAQ. So let's just jump over to a couple other things real quick. Gold and silver down again today. We kind of have been expecting it to roll over in this kind of level, and it's just kind of working itself down. Talked about this yesterday, likely expecting this to have some type of three-wave correction and probably take several weeks to kind of play out. This will kind of consolidate and underperform while the equities market probably continues to grind its way higher to new highs. Silver, the same type of thing. It's unwinding, very tight range going all the way up, and then now it's just kind of unwinding. It's actually silver's kind of potentially has this three-wave correction already underway where it's come down, it's popped back up, and it might actually be fairly close to a measured move. Let's just take a quick look here. If we go from the high down to the low, back up to this high, it'll give us our measured move. And let me just get rid of, we don't need a couple of those lines here, get rid of that right there, and we don't need any of these other ones. This gives you our downside potential target for SPY, where it moved down, had its consolidation, which is just the halfway mark. When you have a mini bear flag on the intraday charts, you'd see a bear flag here. And then, of course, the second half of that move brings us down to 1721. So if it hits this level, I would expect to see some type of bounce back up to at least the 618, the 1751. That's a Fibonacci extension measured move. It also happens to be, look at the cursor here, right through the noise here, right at this previous high, and then of course right where it paused here, took a breather, ate through the overhead supply, and then busted through it and took off. So this is a pretty critical level. It's not only a price support zone from back in time, but it's also a simple pattern of Fibonacci measured move. So some things will start to play out. Let's just take a quick look at gold. I don't think gold has that hiccup. Yeah, it's not as quite as obvious with the candles. If we did that same pattern with gold, go from the high down to the low, back up. So gold's got a little more ways to go. It's trading at 1209 this morning. It's got potential to go to 1195, which would mean that here's a 1200 hole mark. If it comes down to 1200, it's going to probably, the first time it hits 1200, there's probably going to be a bunch of buy orders out there. We'll probably see some intraday bounce, but it might flush down a little bit more, or flush right through down to 1195, kind of shake the market out, and then try and find a bottom and bounce back up. So that's kind of where what we should be looking for with those. Now, if we take a look at gold miners, gold miners is kind of doing a running correction here. It's been it broke down, and it's just continuing to kind of sell off and then kind of rally and then sell off and rally with a downward bias, and it's kind of correcting with these big up days in a one day and then continuing the trend. So these running corrections are really tough, and you can see the downside potential target I've got kind of marked here is the 2087, but this pattern here is very unpredictable. We could actually see this type of pattern when it slides and then does this running correction. You could see that second half of that slide, and it could really wipe out a lot of price action and come down to this next level down here, which is also where there's some high volume support zone. So I'd be very careful touching this one with the gold miners. They could really slide and wash the market out. Miners have a way of doing that, of doing a lot more damage than you think to price action. And visually, this looks about right. You have this move, then you got this running correction, and then you have the second move. And usually a running correction is just a halfway mark. So it's kind of gone from here to here, and it's got a running correction, and this distance here, you can usually see extend once that running correction finishes to the downside. That's how you kind of come up with those rough numbers. They're just ballpark numbers, but it gives you a visual of what you could potentially expect to the downside. Looking at energies real quick, natural gas up 3%. It's had a nice kind of bounce off this kind of washout panic low here. It's starting to get back up to this 20-day moving average. And overall, if we look at the big picture, you could argue it may be starting a head and shoulders formation. It could potentially stall out here and kind of flirt around. And we've got this potential pretty significant neckline that if it's broken, it would go way down here to the $2 mark, which is a whole number. It's also where we've had high volume right across here, right through this consolidation. And of course, there's also a gap window down in here that could get filled. But that being said, it has had a very nice move to the upside. You can argue here it's in a complex correction, having a multi-wave kind of correction. And the big picture, if we go to the weekly chart for natural gas, and let me load more data. So here's the weekly chart of natural gas. And I feel as though this type of low over here is something very similar to this type of low. This type of kind of sell-off and kind of waterfall sell-off is something very similar to like this or this or this. I do feel as though it's going to try and find a bottom. This type of pattern, the way it's played out over this much time and this type of kind of sell-off, I feel as though it's very similar to kind of this pattern right here, meaning we are more or less potentially like right here. Right here, and we might see a little more consolidation through here, but I think we could see a real blast off to the upside to test this 450 area, which is significant high here, right through this noise, another significant high there, and a significant high way back over there. So that's kind of where we are. I think for the natural gas, I think it's got some more time to play out before it really kind of takes off. Looking at crude oil, down 1.17% this morning. The weekly chart shows you how tight of a range we've been in. And I've been talking about this for a while. Tight ranges like this, all they're doing is building up energy. And when they break out, they're going to have expansion. So here is a tight range. You can see expansion into it, tight range, and then once it broke out of that range, huge expansion again to the downside. Same thing here. We had contraction. And then, of course, we had expansion out of it as it unwound. Again, simple bull flag. We had a bull flag run up, consolidated, and when it broke out, you had that second measured move. And, we've got multiple, really, these are the bigger ones showing on the chart. This one here as well. We had contraction, and then it expanded to the downside. And here we've got a pretty big contraction, very similar to one over here. And the question is, which way is it going to break? This looks like a major bottoming formation, a pretty significant support zone right through the upper half here of these highs and down where this high volume is in these lows. So if this does break to the downside, we've been talking about this for a while, that several weeks, that it's going to have potential to drop to the 48, 47 area, somewhere down in here. It could expand and move to the downside. If it breaks to the upside, then we're going somewhere right up into this area, this 60 level, which we've been talking about pretty much for a month. We've been watching it consolidate here. And if we go to the daily chart, you get a real good feeling for these kind of support levels. And we're starting to see some bearish price action today. Just look at these levels across here. We haven't had a close below this support trend line. And we've got these kind of this high level here kind of pin where we haven't really closed above these spike highs or these levels. If we start to close below here, this could be the start of something pretty ugly. And of course, we see it move and drop all the way down to this 48, 47 area, and potentially the weekly chart shows we go down to the 46, or actually maybe even 45 if it gets really ugly. But that's where we are, building up energy. The question is, which way is this going to break and run? Go to the 60 or go to the 47? It's starting to look like it's breaking to the downside. It's not breaking yet, but this bearish pattern, we've got to move down, a little bear flag, and it's starting to move down, and it could potentially close below that trend line today, which if it does may be an opportunity for us to get an inverse ETF and try and profit from a precipitous waterfall sell-off. So bear with me, it's a long video today, but there's lots of interesting stuff starting to unfold that we've been waiting and watching for. And equities markets are loading up for a pop. US crude oil is looking ready to break down. And last but not least, let's just touch on the NIB, which continues to more or less bounce bottom here and trying to find a bottom in this oversold condition. And we're just letting it kind of play out at this point. That's it for now. Take care. Bye-bye.